The stickiness of Bitcoin. So I'm going to talk about here the 5 largest run-ups per month in Bitcoin's history. I'm going to talk about the implications of the psychology behind that and why the design by Satoshi was so brilliant. And also what kind of impact that has on supply and demand and the stickiness, the overall stickiness of Bitcoin, which means that there's a difference between somebody buying Bitcoin and understanding Bitcoin, which ties into my green light theory around Bitcoin. But I think the important thing to note there that with the volatility, I mean, in the last couple of months, I don't remember a more volatile time in history of the markets. And Bitcoin has not been immune to that. We're actually down, I think, from the day that Trump, the election in November 2024, I think we're actually down now. So it went way up to an all-time high and it's kind of chopped downward since then, but it's gone up and down. It's been very volatile. And it seems like that's what the administration in the US is wanting. So what does that volatility have to do with the psychology behind Bitcoin? So kind of the theory there is that every 4 years, historically, the supply has had a big impact on the interest within Bitcoin and the price within Bitcoin. But I think that because the supply for the most part has flatlined now, the majority of Bitcoin has already been released and mined and put into circulation, that the halvings won't be as impactful as they were before. But that doesn't mean that things are going to get any less volatile than they are today. So that volatility, in my opinion, was built into Bitcoin on purpose, because the theory there is that every cycle or every run up, I'm going to talk about 5 here, the run ups, but it brings people into Bitcoin. It gets people on their computers, searching, learning, trying to figure out how to buy Bitcoin. And so it brings a ton of people into it every time the price is running up. And then it crashes. And then most people who don't understand Bitcoin, they sell it because they panic. They don't know what they're holding. But every time that happens, there's usually we'll call it 2 to 5%. It might be more than that, but we'll say 2 to 5% that stick around. And they get it and they understand it. And that green light turns on in their mind. So that's what I want to talk about here. So we'll start with the first part here, the 5 largest Bitcoin run-ups in Bitcoin's history. So today, even this week, we saw Bitcoin go from about $75,000 all the way up to $83,000 very quickly in about an hour. So it moves fast. And when it moves fast and when it's very volatile upwards and downwards, it gets a lot of interest. And that's what we want. We want interest. So here's the top 5 largest monthly Bitcoin run-ups in history. So we got January 2021, Bitcoin went up 56% in 1 month from 18,000 to 29,000. So that would be like Bitcoin going from 75 to 150,000 or probably 160,000 in 1 month. So if you think that that's not possible, it's happened before. And at that time, January 2021, there was probably just as much uncertainty, but there was much less demand for Bitcoin. There was much less long-term holders of Bitcoin and large pools of capital coming into Bitcoin. So it is different. I think that it's going to be a smaller scale in 2021 than it will be this year. What month? I have no idea. I don't pretend to know the future. But again, March 2021, Bitcoin rose almost 50%. So keep in mind here that this was 4 years ago, and historically Bitcoin moves in 4-year cycles. But again, going back to the supply dynamics of this and the fact that there's only 5% of Bitcoin left to be mined for these next 100 years, I think that those halving cycles are going to be less and less relevant over time. But again, that doesn't change the volatility here. So March 2021, it went up 48% from 33,000 to 50,000. So just look at that. That went from 18,000 in January 2021 to 50,000 in March 2021. So within 3 months, it pretty much tripled. In 3 months, which would be over 210,000 over a 3-month from today. But I mean, you could go from 80, you could go from 90, whatever that is. But either way, the point is that this thing, when it moves fast. So we don't need to get into the other ones. The other ones were March 2024. It went up 44%. November 2024, it went up by 37%. And December 2020, it moved up 38%. So even if, I mean, going back to there, December 2020, before this run up of 2021, which was about 4 years ago, it went from 13,000 to 50,000 from December to March. That's 4x. Well, just about 4x. That's crazy. So I want to share a spreadsheet here too, because this is, in my opinion, this is one of the beautiful things about Bitcoin. It's, the SHA-256, the encryption is great. The technology, the fact that you can send Bitcoin to any person on the planet in seconds is great. The decentralization, the fact that there's 25,000 nodes around the world that are auditing the blockchain, self-auditing itself every 10 minutes. The fixed supply aspect, the only true scarcity that we've ever had in human history. And of course, the overall, what's the word I'm looking for here? The only, I want to say ethical, but it's not ethical. It's the only asset that you can actually own. The only asset that you can keep. And regardless of how much the other person or your country or whoever, how much power they have, how many weapons they have, they cannot take Bitcoin from you. You could say, well, yeah, I could hold a piece of gold. I can take custody of that. I can keep it in my drawer. But it's only yours until somebody more powerful than you decides that they want to take that, with more advanced weapons than you decide to take that piece of gold. But with Bitcoin, they can't do that. If you understand Bitcoin, if you learn how to secure it properly, no matter how much power they have over you, they cannot take that from you. And that's the only asset that exists and has existed in human history like that. But also the brilliance of Bitcoin is the psychology here. So I got the demand and the supply, the people who understand Bitcoin, the top line, and the bottom line supply is the total Bitcoin available at the time. So again, kind of just going back to that, that's what I'm saying here is this supply here isn't going to change much for these next 100 years. So it's pretty much irrelevant at this point. That's why I don't think that the 4-year cycles are going to be a thing anymore. If they are this time around, it won't be for much longer. So let's use an example here. Let's say that before a run up. So let's say today, when Bitcoin's at about $80,000, let's say that there are 2 million people who understand Bitcoin. That's the demand for Bitcoin, because again, it's different. Owning Bitcoin is different than understanding Bitcoin, because if you understand Bitcoin, you're much less likely to sell when it's crashing or when it's running up. But if you don't understand Bitcoin, it doesn't matter how much you hold, doesn't matter how many wallets you have, you're likely to sell it if you don't understand what you're holding when it goes up or down. So let's say for simplicity here, there's 19.5, I guess I can't use decimals here, 19.5 million Bitcoin available. That's the total supply right now. I don't know if that's the right number or not. No, it's not. Need one more zero there. Okay, so what you have to keep in mind here about these two numbers is that top line there, those are the total amount of people who are fighting for that bottom line there. So as this number increases, as the demand goes up, there's going to be more and more people fighting over that same amount of supply there. So this is at 80K. Let's make another version of this. And you can see, you can understand the fact that as this demand goes up, let's say it goes to 5 million. Now there's 5 million people fighting for that same 19.5 million Bitcoin, which means that the price is inherently going to go up. When there's more people chasing the same amount of scarce units of Bitcoin, the price will inherently go up. So as that number demand goes up, as the green lights around the world start to turn on, that's when the price starts moving up. So the higher that demand goes without the bottom line changing there, that's what a price increase is. There's less people selling it, there's more people wanting it, and the supply does not change for the most part. It's very incremental how much the Bitcoin supply is going to change over these next 100 years. So let's go back to 2 million here. So let's say that Bitcoin shoots up to, it does one of its normal increases from like 80K to 120K or 80K to 150K. That's usually what peaks a bunch of demand here. So with that, let's say that the price goes from 80 to 120. And now there's a bunch of new people who are interested in buying this, or whatever it is, whatever the big run up there is, the 50% or 40% increase in a month. You're going to have more interest there. You're going to have more people Googling Bitcoin. You're going to have more people downloading wallets. You're going to have more people signing up for accounts on exchanges. You're going to have more people interested in Bitcoin. And that's what we want. So let's say that number all around the world, there's 8 billion people. Let's say that there's 30 million people now that are interested in Bitcoin. So you can see there that obviously the demand has gone up. The supply is unchanged. So that should inherently keep increasing the price. But that's going to stop. And eventually there'll come a point where the demand stops and some of the people who profited from 80 or below, they start selling that. And so the supply actually increases. So this should actually be a slightly different equation, but that'll just complicate things. But if you understand like the available supply, it's probably not 19.5 million. There's probably only about 2 million Bitcoin available. But when the price runs up, the demand stops temporarily, and some of that demand starts selling that, or some of the buyers here start selling it. As this 30 million starts to sell some of their coins because they're in profit, the supply increases, the demand goes down, and that inherently drives the price of Bitcoin down. So that's what's happened every time. Every time there's a big run up, there's always a sell off afterwards because of that. Because the demand dries up, the supply increases because some of those Bitcoiners there who don't understand Bitcoin are selling their Bitcoin. But here's the beauty of it though, because this is the more long-term, the psychological aspect of Bitcoin. So let's say that of those 28 million people that started buying Bitcoin and started Googling it and got a wallet, let's say that about 2%, let's say 5%, just for simplicity. Actually, you know what? Let's go 1%, just to make it very conservative, very easy. So of that 28 million people who were interested, didn't understand it yet, but were interested, let's say that, what is that? Would it be 280,000? Either way, might be 280,000. So let's go 2.28. Why am I putting decimals here? So with that volatility, you bring interest. A lot of people at that point still don't understand Bitcoin, so they sell it quickly. Paper hands, lettuce hands, whatever you want to call it. But from that group, even if 1% of those people who bought Bitcoin and started to learn about Bitcoin, they now have some skin in the game and they kind of understand what they're holding, that drives the number of green lights up. That drives the demand, the people who understand Bitcoin up. And you have to understand that once that green light turns on, it is never turning off. Ever. So that demand will only go up and the supply will not change much. 100 years, 5%, that's nothing, right? But these large swings of interest and peaks of interest, and even if 1 or 2% of those people stick around, that is going to drive up the demand without changing the supply. And Bitcoin is the only asset that, irregardless of the demand, irregardless of how many people want to buy Bitcoin, the supply cannot change. Unless you're able to time travel into the future, those Bitcoin are stuck in time. Because every 10 minutes, new Bitcoin are created, and you cannot shortcut that. You cannot fast track that. And to get to that point of understanding, you have to put in the time. But that's the psychology here. Because it went from 2 million there to 30 million demand, and it dropped back to 2.2 million people. But the supply didn't change, right? And as that top number grows, as that demand grows, the price will inherently keep going up forever. And that is the psychology and the brilliance behind Bitcoin. And that's why the green lights around the world will continue lighting up forever. And once they light up, they will never turn off. So that's the psychology of Bitcoin. That's the green light theory of Bitcoin. That's the 1 or 2% that stick around every time there's a large run up. And that is Bitcoin. That is the brilliance of Satoshi, the great one. The eighth wonder of the world, the Bitcoin white paper. So I hope you enjoyed that. I hope you learned something. And if you feel like it, you can give some back. QR code there for ARNIE'S Wallet. So hope you're having a great day today. Thanks again for watching, and we'll talk to you soon.